Hello everybody, the Teenage Investor here. Today we will be looking at 3 stocks to buy in April 2019. So we're going to have 3 companies here. One is smaller and 2 of them are very large companies. And we'll be looking at why you should buy them or look at them or watch them. Keep them on your watch list during April 2019. So first we have ELF stock. So ELF, ticker ELF, is a beauty brand. They sell cosmetics for the eyes, lips, and face. That's what ELF stands for. And they sell makeup and brushes and all those little things there. So this is a really small company. It's under a $500 million market cap. Over the past month, it has been going up quite steadily. When I first started looking at it, it was around $8 and now it's around $10. So it's been going up quite steadily. It's a little bit at the point where I don't know if I want to buy it, so I'll be watching it in April 2019. And anything under $10 really is a buy for me. But right now it's just slightly over $10, and I feel like it's basically at a fair value right now. I'll still be looking at it because it's still very interesting at this price, but it's a little bit too high just for me at the moment. Basically what's going on with this company is that they just finished closing their stores. They had a few retail stores, I think about 22 stores, and they closed them all because they were losing them money. Now they're going to be able to focus more on the business. They do sell more online and in retail stores like Walmart and Target. They'll be able to focus their vision more on that rather than trying to focus on retail stores that were losing them money. So that's a perfect move in my opinion, and it's definitely going to play out well for them in the future. They have taken some short-term losses because of it, but in the future they should be able to make up for these losses with extreme returns from focusing more on the retail side rather than just opening their own stores. Also, their products are really cheap as compared to some more known brands such as Estee Lauder, some more with more prestige. These ones, they're extremely cheap products, but very good quality. A lot of people have heard of ELF, and a lot of the younger generation actually has been using ELF. And this is also a good hedge position for your portfolio because let's say we get into a recession, people won't stop using makeup. They'll just use cheaper makeup. So that's why ELF is perfectly positioned for a recession, and that's why you should also check out my video. I made a video only on ELF on why you should be buying that stock. But let's move on to Facebook. So Facebook, it's been down ever since the Cambridge Analytica situation. It dropped from $217 all the way to now. It's a 24% drop from that point. We're at around $165 now, and Facebook is an amazing company. They have no debt, extreme moat around it because everyone knows Facebook, and it's everyone uses Facebook, and it's a humongous platform. They are starting to monetize Instagram. They just rolled out Instagram Store. Basically, you can buy straight off of Instagram. Sorry. And basically, yeah, so it's a huge social network company. It's worth about $500 billion at this point. It's an incredible company. Mark Zuckerberg has done an amazing job with this company, grown it from a small little company into this behemoth of a company. And its influence, it owns Instagram, Facebook, WhatsApp, and Facebook Messenger, almost like all the biggest social media apps that you can use, they own. So I mean, apart from Twitter and whatever and YouTube, I mean, it's basically them. They're basically one of the biggest social networking companies in the world, and they have had all kinds of news stories thrown at them, all kinds of bad news, and it hasn't reacted badly. So no matter what the news wants to throw at them at this point, they'll take it. After the Cambridge Analytica situation, people just accepted the fact that they are being tracked, and that's the way it's gonna be. And Facebook is implementing some strategies to try to reverse this and try to make it more privacy friendly, but there's always going to be problems with privacy and privacy concerns with such companies, and that's just the way it is. And at this point, no news story is sticking. No matter what the news is going to throw at them, they just shareholders won't react to it because we've just heard the worst from them, and it'll just get better from here. So the last company is Disney. So Disney just recently acquired 21st Century Fox for $71.3 billion. Now, I'm a Disney shareholder, and for me, this merger is incredible. With this merger, they own not only Titanic and all kinds of other things, but they also own 60% of Hulu now. They own 30%, and now they got the 30% from Fox. They own 60% of Hulu, a streaming company. So that's gonna influence. They're gonna have a larger influence with their streaming, and also they're rolling out their own streaming service, Disney. And so basically now what Bob Iger, CEO, has been telling the stockholders shareholders is that this merger will effectively bring $2 billion in cost savings. So they're going to be laying off quite a few workers. So far, I think they're planning on laying off at least 3,000 workers. But this is incredible because they're going to be lowering costs for both companies, and this merger is going to make them so much bigger. And now they have such a larger influence in the media space. Fox did keep some of they kept their news station, they kept some sports, but it's much smaller, and basically Disney bought almost every other asset they held. Now this is a great merger in my opinion. It's gonna increase their influence in media, and just making Disney swallow these little, this 21st Century Fox isn't a small company. I mean, $71 billion for a company isn't too cheap, but it's going to increase their influence massively. And this is just a stock to watch to see how it's going to play out in the next few months, if not in the next year. Obviously, the $71 billion hit is an incredible short-term hit, but in the long term, I'm sure it's going to play out fantastically, and I'm sure it's going to be worth it for Disney shareholders such as me. They also said that employees are going to receive stock bonuses, and employees at Fox, and obviously they're going to have a lot of conflicting positions. I mean, if you have two positions that are the same at Fox and Disney, they're only going to need one now, so they're going to be laying off all kinds of people. But this is also going to lower their costs, increasing their profits. So, I mean, in my opinion, it's an amazing merger. Disney has fallen, I think, 6% this week. So, yeah, it's been falling. But in my opinion, these are all short-term fears, and that it's not going to work, or it's, all those little things. But in the long term, I'm sure it's going to be fantastic, and I'm planning on looking at it and seeing if it drops a little bit more, and maybe even buying some more Disney stock. But that's it for today, guys. Hope you enjoyed the video. Don't forget to leave a like and subscribe if you did, and I'll see you in the next one.